Good turnaround Tuesday, everybody. Hello, Claudia. How's everyone doing? Thought I'd start off with Bitcoin since it's going to be it really is in the news with Mnuchin yesterday talking about Libra. What an oxymoron for a cryptocurrency. Libra, which is the astrological sign, which are the scales, which means balanced. So that's crypto is very balanced, as you could tell from the Bitcoin chart here. So Libra, I don't know, but I do know this. We have a descending triangle developing here in Bitcoin. And here's your line in the sand, bulls. And us here at FA are not perma bears, even though we all know how much Steve Volge believes and loves crypto, and all my crypto guests that come in, including Mark. What's Mark's last name again, Steve? Yusko. Yeah, so, and in fact, I have a crypto guy coming in today, so Steve, get ready with, with a question like, why are they going to end up being worthless? So this is what I see. Long term, I still think we could have a bull market, but we're approaching August, and I interviewed someone who talked about, and it, why wouldn't it apply? Ghost month in August for Asians, it's a superstition. They don't do a lot of trading. But what I see here is if we take out this descending triangle, I have confluence at 7,000. Okay, so it's very possible that that's where we're going. We have this here at 7,000, a speed line. If you just take the size of the formation, you're talking 4,000. That would be 6. That's where the 200 is coming in. And look at this low right here. It's holding the 50-day. So back under the 50-day, there's problems. Sometimes descending triangles could have more than one touch or tag on the upper line, but we're not perma bears here at FA. Steve was long Ethereum down here back at the beginning of the year. I was talking Royal Trust in Bitcoin. GBTC was $4. It actually went to 15, and I was so smart I got out at 7. But this is the current look, and I'd be very careful being long. But down here, I think we could set up a nice buying opportunity into September, something like that, or August at 6,000. So 7 or 6,000, that's my call on Bitcoin. Any questions about that from our audience of warriors? Anything from me on that? Everyone see the case, the technical case? I don't know much about fundamentals in anything, but I can read a chart. I had someone send me an email today, and he's had lack of success trading E-minis, and he asked me this question: if you had a small account now, because he's going to give another go, Dale, would you trade futures, options, or FX? Anyone want to guess what answer I gave him? I know what you're going to guess. No. Good guess, but no. Oh yeah, there are micro minis. Futures? No. Jason? No. Okay. You know what I told him? It's the driver, not the vehicle. So people are trying to decide when they're probably having trading issues of psychology, of risk management, being able to let a good trade run, all the fundamentals of trading, just being a decent trader. It doesn't matter whether you trade futures, FX, stocks, options, that's a different story with decay. ETFs, it's not the vehicle, it's who's driving the car. And you could ask anyone who's taken a ride with Steve Volge, it's who's driving the car, as everyone in there puts straps on their seatbelts and puts their helmets on. So anyway, I'm picking on Steve a little bit. He knows I love him. So that's the answer. Do not blame it on the asset class that you're having problems and you're losing money in the market. It's not whether you're in futures or FX or stocks. It's how you trade, not what you trade. Everyone with me? So that was my answer to him. So it is Tuesday, so I'm taking a couple of shots here. Want to give you an update on EG, which exploded to the upside. And I remember Amanda, she's so good. She's so good that when we were shorting it here, and we got a decent little break, right? From last week, we thought we had it in the bag. Thankfully, I made a sacrifice to the FX gods on Friday and took some in. And then I tried it again here at 61.8 back and got out of the way. And then I put a little on at 90 and I sold more up here above 90.30. So we have a throw over working here. And I remember yesterday, Steve saying, you know, it's a good trade with stops. I said, well, where's your stop? 91. That's where my stop is. You'll know we have something decent going. It didn't diverge on the 1 hour, but it could diverge here. So back inside this wedge line or broadening top line would be a pretty good signal. And now if you look at 89.60, should we get back down here at 55 and take it out, that's going to take it back down to like 88.80, 88.70. And, you know, I have a speed line here. And I have a speed line here, which is going to be around the halfway back level. So this is one of my turnaround Tuesday candidates up here. And the other one is the Dixie. So Dixie, I'm not sure what the spike was. You know, lots of pound weakness here, but I'm trying it here. I'm a little underwater, short from 24, risking this high. So we'll see what happens. We start getting through this high, I guess the dollar's on its way to new highs. So the next 24 hours in the dollar are pretty important. If we could get through this high, we'll probably, there's stops here, and the grand prize is up here. But there are also stops under Friday's low in here. And my bet is that we're going to challenge at least a gap at 620 and possibly this before the dollar blows to new highs. And I'd also be pretty careful shorting cable down here. Here's your daily. We have daily divergence. The only thing the bears have working for them, besides being, you know, short and right forever, I'd be careful about this non-confirmation. I thought it was a third drive last week, and it wasn't much of a push. But as you can see, on the daily, we're diverging. Still a chance for the 4 hour if we could turn it. We're getting a little bit of a wick here and need this to turn for EG to have a chance. As you can tell on the 1 hour, it's a confirmed low. So Dixie and EG are a couple of things I'm looking at. I'm still not ready to do anything. I'm still flat the gold. Given up a little here today with a stronger dollar, but you know, I don't see anything that tells me I should be short. You know, I still think we're going to challenge these highs up here. You know, this is kind of messy. Silver looks great. Steve showed the gold silver ratio. It's working again. I talked about it at 92. Let's just look at it. And you know, I didn't recommend putting the trade on because, you know, that's a little bit sophisticated for me. But I said, you know, it'd be a great idea to take some of your gold and sell it and buy silver with it. So gold silver ratio following through again. bit of a distribution top. So still have to favor silver. You know, it might take silver getting back up towards 16 bucks for gold to get to my zone where I want to be shorting it. But I have max leverage on long positions on ForexAnalytix. I'm really leveraged up with these guys. I should write a book. Okay. I don't have the patience to do it. I've tried. I'm more of a kind of an essay writer. Yeah, Amanda. Oh, you want me to say that? Amanda gets embarrassed about me saying that, but she's such a pro. What a find. And I think Amanda met Blake at Wise Trade. So, God, you know how many people have learned how to trade and make a living and support their family from Blake? You know, quite a number. I mean, he's really paid it forward. And you know what? I think we all are here now at ForexAnalytix. So there's our headliner, Blake. We all know Grega is excellent. We all know Stelios is excellent. Okay, Amanda's Skyping. I did. I owe Blake and Paulie. So, you know, Paulie was there too. And you know what? You can see Paulie and get ready for the U.S. markets on the European crossover as a member. Okay, there's Amanda. She's pretty. There's Andre, very talented. Anyway, where are you going to find a team like that? All in one place. So I recommend you spend $1 today if you haven't already. And again, really, tell me that you didn't get $1 worth in 10 days. So you're spending 10 cents a day. Steve, I could see that it's coming up. I'm going to have to turn off the notifications next time. Anyway, Blake, I can't talk now. Will you take?
You got to turn off your notifications. Steve writes all sorts of crazy crap on there, and then now the whole. Hopefully, people aren't watching this recorded, and then go back and pause and actually read Steve's comments, and hopefully it's not on a big screen with kids around, for crying out loud.
Anyway, I will from now on, I promise. And I'm so glad. I'm so glad Steve's parents had good time.
Jeez.
Maybe that's how he became a trader.
So yeah, I guess. All right. So
hey, away, please, bro. All right.
Let's talk a little bit about the cable this morning. Cable came under quite a bit of pressure. You know, we do have. You were talking about the non confirming, you know, RSI, and you know, we hit new lows. I mean, there's a constant worry about Brexit and Boris Johnson, and the cable came under some pressure today. We broke through these lows. I actually bought some cable down here. I bought it at 35 earlier. This is like an hour ago. I bought it like as we were coming through these lows, because my personal thinking is it's going to be a false breakdown, but I got a little worried as we were approaching the 127% extension. But you know, I'm sticking with it for now. I'd like to see how we close today. I don't mind sticking around, especially if the cable can, you know, move back up towards 125. I might actually hold on to it. But you know, I'm long a little bit. I'm not too terribly worried about it because it's, you know, just small positions. I'm trading with cable. I've actually been trading really small. I haven't been you know, when I trade the euro or the Aussie, I've been trading a lot larger positions. But with the cable, I've been really small in recent months. You know, because I have been trying to pick it up on dips, and you know, sometimes successfully, sometimes unsuccessfully. So I just, you know, I've just been keeping it light. However, I'd like to see how we react here. Now, I had some comments and questions about the cable on the crosses in our chat room. So what I thought I'd do today is talk about the pound here, but also I need to reference like the Aussie. Like I put in a pattern in play yesterday for the Aussie dollar on the long side. to buy dips down to 70.35 to 70.45 as we have broken the downtrend line. When we dipped this morning to 25, I bought some Aussie, so I am long. Now the reason why I bring this up is because if you look at the pound Aussie pair, we have a really strong bear flag formation, and yet we are. And by the way, we are extremely oversold. The peso, which I am long too. We're spiking out. AMLO is speaking right now, so watch the dollar max here. Now, if you guys don't know why I'm long the dollar max, let me just show this to you. Long term, and I told everybody in our chat room, and remember, if you guys are not part of the ForexAnalytix community, I spend the majority of my day in there, and here you guys can say hi. You guys are on Jumbotron. Say hi on Jumbotron. Well, I'll let you say hi on Jumbotron when I come back to this. I'll come back to you guys here in just a second. So I'm buying the dollar max based on this long-term triangle and pennant type of formation, because I figure, well, we're going to get a reaction from here. Whether this ultimately leads to a move higher, breakout, I don't know. But I'd rather be a buyer here than seller. Risk reward will allow it. Oh, there's you guys are on Jumbotron now. There you go. So I was in the chat room yesterday saying, hey, I want to buy the dollar max down here. So I already started picking up a position in the dollar max, and it is, in my opinion, a great risk reward, because you're risking. Look, let's do the math here. So the risk from current levels, the risk is 1% roughly, right? Okay, and reward is 6%. So it's a 1 to 6 risk reward roughly, or maybe 1 to 5 risk reward right now, and then possibly quite a lot more too, depending on if the pair. Oh, there you guys. Sorry, there's your Jumbotron. Wow, Greg, that's big. And so, like I said, it in my opinion is worth picking up down there. Now, I have to go back and talk. I'll take you guys off the chat room here for a little bit. I'll go back and talk about the other pound pairs, because the pound Aussie, I cannot, even though I'm buying the Aussie dollar because I think the Aussie is a breakout right now. I don't want to short the pound Aussie because look at the daily RSI. We're way oversold. Now, if you want to sell the pound Aussie, which I don't think is a bad trade, I would do it up here. I would just wait for a rally back to 178, from 176 and change. Just, wait for that move versus trying to sell it, and chase it down here when you got relative strength so oversold. Then you take over to the pound New Zealand. I mean, we are at the 78% retracement. We are at channel support. So I wouldn't want to be short down here either. Does that mean I'd want to be long? Well, like I said, I picked up the pound on the long side just a little bit, but I'm not sure if I'm ballsy enough to try buying some of these cross rates. The pound New Zealand and pound Aussie, if they continue lower, I mean, you could be down 200 pips, within 12 hours. So it's like trying to buy these counter trend right now doesn't make a whole lot of sense to me. To buy the pound dollar and risk 50 pips to make 100, I'll do it on small positions. And so that's kind of how I'm playing the crosses. Now, another one that we obviously have to look at this morning is the euro pound. The euro pound has taken stops above the multi-year trend line. So this is the daily chart in the euro pound. We almost hit channel highs. I mean, let's keep in mind that this stupid thing is not even breaking down. It's not doesn't even have the desire to break down, and any type of breakdown just gets reversed. It's pretty crazy. However, this could be just a simple stop loss run. So what I'm really interested to see is how the euro pound closes by the end of the day. If the pound dollar closes back at 125, the euro might be at, let's say, 112.40. The euro pound would be back down here at 89.80. I would almost be more keen to shorting the euro pound on a poor close and trying to cherry pick it up here, because I really just want to see how the pound reacts today. I want to see if the pound move was really more of a stop loss run, because there isn't anything that suggests that I should be buying the cable from a fundamental standpoint. Brexit is obviously the number one worry amongst traders and investors right now. So I don't know if I really want to get too aggressive trying to pick off the pound on these lows on a bunch of different crosses. I'll just play it, vanilla through the cable versus any of these other crosses. However, if you're going to do it, I would probably just venture into one cross rate versus trying to, blanket buy the cable across the board, because the pound is weak. Let's face it, the pound is definitely a weak currency right now. So you just have to be a little careful with it. But let's, and one of the other reasons why I'm also buying the pound versus any of the crosses is I still am a believer in these precious metals. I mean, you look at silver, if you guys haven't seen it, we're in a bull flag pattern, and we are breaking out to the upside and of the flag. Now, a break above 1560, I mean, that this is where silver goes, like, straight up bullish, is right through here. Okay. So if we break through 1560, I wouldn't want to be short the dollar, or long the dollar in any way, shape, or form, because that means silver is probably leading gold higher, which gold is just consolidating. It's kind of like waiting on silver, in my opinion. So if silver starts to break out, gold may start to move, and then next thing you know, you have a big move in these precious metals, which may lead to some dollar weakness. So I'm more inclined to play the dollar on the short side. Like, that's why I bought the cable. I mean, I own it at 35, so I own it right where it's at right now. I'm more inclined to do that than try to play across, because I'm sitting here watching these precious metals, and they're pretty well bid. So anyway, just oh shoot, did I do that? Oh, I did. Dang it. I just realized I got triggered into a little bit more dollar mex than I thought. Well, I wasn't paying attention while I was talking to you guys. Anyway, I am definitely long the US dollar Mexican peso now. I had an order above, I forgot I had an order above this 19 right above here to get triggered in a little bit more long, and now I'm long quite a bit. So anyway, it's all right. As long as we can, maintain these levels, I'm fine. I'm a little worried if it starts to turn lower here. Now let's talk real quick about the euro. The euro is weak. I would expect the 112 to offer really good support. So we might, break these lows, but even below there, I would be more inclined to buy the euro on a dip below 112 than to be a seller. So that's just something that I'm, keeping an eye on also regarding the euro. So anyway, that's just some things that I'm looking at as far as the cable goes, and some of these crosses, and with the Aussie. But I want to see maybe Stelios has a better view of what happened with the cable today. Stelios, are you here?
Hello, good morning.
Hey, good morning. So the pound came under pressure. What's the story here with the cable?
Well, again, I didn't see any particular headlines. It's just more and more nervousness when because it's becoming clear that Boris Johnson is going to win. That's at least the unofficial talk, that he's going to easily win the leadership. So, and he's been very pro. He said we're going out on end of October no matter what. So as the days go by and there is no progress, I mean, I haven't heard about any kind of talk or progress in that respect at all for weeks now. So, oh, was it? Sorry, then I must have missed something. Amanda says there was some comments from Dominic Grieve. But what I was going to say is that the interesting thing is that we actually had average earnings index today, which is something that everybody and the Bank of England looks at, and they compare it to the inflation rate, and it actually ticked up quite a lot from 3.1% estimated to 3.4% year on year, and inflation is 1.9%. So that's a pretty healthy gap and a good number. But like Amanda is saying, Dominic Grieve said, actually, Parliament may not be able to easily stop a no-deal Brexit. I mean, I don't know what's going to happen with this, and it seems to be a complete mess. But I've said this before. I think both sides have vested interest to find some kind of compromise, but they're moving at a snail's pace and they're doing nothing. So that's spooking the market. That's for sure.
Yeah, it must be, because the cable is just, it cannot find its footing, and it's definitely under pressure. All right. Well, you know, there's something else that I wanted to mention, and I read Mark Chandler every day. I love his morning reports. For those of you that know Mark, he's been a guest here before. Him and I talk separately from time to time, and there's the European Commission President nominee von der Leyen is this is a she is endorsed a European. I'm going to read it here. She has endorsed the European-style Green Deal, and although there were not enough details to win over the Greens' endorsement, she is expected to win the support of the majority of 374 MPs to replace Juncker. There will likely be a larger market reaction, a euro negative reaction, if she fails to secure a majority. Under such a scenario, an emergency summit would probably be necessary. The vote is expected toward the end of close of European markets today. That's something to keep an eye on, and it might be what's keeping some pressure on the euro. But that's not the only place that I read about her. I was reading something else that came from Citi, noting the same thing, basically the same thing earlier today. So let's keep an eye on the euro today as that vote comes in, because if she doesn't win a majority, maybe that might weigh on the euro a little bit, and you might get vice versa. You might have the market preemptively selling the euro as a result, and if she does have a majority, maybe the euro does catch a bid by the end of the European close. So there's something else to keep in mind. All right, well, I'm going to pass it over to my colleague Steve and Stelio. Steve, how are you feeling today? A little bit better with antibiotics?
Hey, Blaker. Yeah.
And let's keep Mr. Wiggle inside your pants. And okay, let's or make sure your dad does anyway. So
no, don't misunderstand. That was
too
not
late. Steve was conceived.
No. Don't misunderstand that comment didn't go public. We can't see Dale's.
Oh, okay, all right. Well,
Otherwise, I wouldn't have written it. So don't worry.
Okay, all right. I thought
No.
For those of you that didn't know, Steve was talking about Mr. Wiggles.
Oh, so Skype doesn't show up, only the screen.
No, if it did, I wouldn't have written such a
Thank goodness.
Yeah, no,
okay, I thought
you,
people were going to be rewinding that later. Anyway. Okay, so anyway, well, I'm going to pass it over to you guys because I'm going to get to the markets. I want to thank everybody for being here, and then also remember, if you are trading and you want to be part of the ForexAnalytix community, visit Forest Park FX. They can push you to the reimbursement program, which would allow your trading to help compensate for your subscription cost of ForexAnalytix. Or if you're in North America and you want to get cashback rebate, you can do that as well. Their contact information is right here on our website. If you just go to where it says reimbursement program, right over here to the right, and then you can see their contact information right here. So make sure you get a hold of Forest Park FX. They're a great group of folks to work with. They just want you to succeed so you can continue to trade, and as long as you succeed, they continue to succeed. So, all right, guys, I'm going to pass it over to you.
Good
Thank you,
luck
Blake.
today,
Thank you.
Blake.
Thanks,
you.
guys.
So we talked about the UK. Actually, Blake interestingly mentioned the German lady who I cannot pronounce her name. I will learn it eventually. And it reminded me of
Just for
something.
data, Stelio, US retail
Oh, do we?
sales.
Retail sales, yes, you're right,
Core
sorry.
retail sales quite a lot stronger than expected. US retail control percentage. That's it actually. So better US data bottom line. Definitely we're getting a USD positive reaction. Euro pushing the lows of the day. Pound not at the lows of the day yet, but definitely not far away from that. We see the effect mostly weighing on the euro to begin with, and some appreciation here in the USD yen. Let's go on 4-hour chart. Here it is. So yeah, go ahead, Stelio, and I'll keep monitoring.
Yes, I was going to say that we have to keep an eye on what's happening in Germany in terms of the political scene, and the Green Party is actually now polling top, which is quite extraordinary. You have traditional political parties in most countries are just collapsing. In the UK, Labour and Conservative are nowhere near where they used to be, and parties like the Liberal Democrats, who used to get a very small percentage, are now falling quite high, and the Greens, who used to be at 10%, below 10% in Germany, are now 25 plus. So just something to think about. And Germany is an exporter of the auto industry is huge for Germany, and it will scares me to think about what they might do if they got in power. Just something to think about. And it's the next elections are not that close, but with the momentum that's happening,
yeah, we have a strong turn of voters all around the globe. I'm talking mostly about developed countries.
Yes.
To voting parties, that have been friends on many occasions. I think it's like a disappointment vote of some kind. Like they want something different. They're not sure what they want. That's why we've often seen that, of course, create huge problems, like in the case of Greece and Syriza, and I'm assuming Italy is not much different in that sense.
Yes. Yeah, absolutely. We also had this morning, we had the German ZEW economic sentiment, and for those who are not familiar, it's just a survey basically in Germany from institutional investors and analysts, and we are deep in negative territory now. We had the negative 24.5 reading versus negative 21.1 last reading. So this is clearly not a good sign, and it's showing that sentiment is particularly bad. And this is for, if I recall correctly, for the next 6 months. So 6-month outlook not looking good, and I don't blame them. It's with the way things are going in Germany and in Europe in general. What else do we have? CPI out of New Zealand, that was bang in line as expected at 1.7 year on year, and the Kiwi was slightly stronger overnight, but really not much more to talk about.
Honest,
actually,
the commodity currencies are still strongly overperforming. We said that yesterday as well, that euro and pound are doing much worse. We've seen that despite dollar strength coming through the market, Aussie and Kiwi are just consolidating near the highs. So they've been almost unaffected by dollar going higher. We can see here in the DXY, we've already had like a very strong day higher, but that's mostly due to what is happening with the euro and the pound, and very little to what's happening with the rest of the currencies. So yeah, and that is why actually we've seen like euro crosses, pound crosses continue to underperform. Anything else, Sergio?
no, actually.
Okay.
That's pretty much it. We do have some more minor, actually not minor. We have industrial production and business inventories, but that's in a little while out of the US.
Yeah, and I doubt it's going to move the market. Definitely, though, the print we just had in retail sales is going to be important. Undeniably, it's also going to affect the expectations for the for GDP. So, that should bring some revisions.
Yes, and the problem that the Fed has now in 2 weeks from tomorrow is that
the
the
Fed has a
economy.
huge problem.
Yeah, the economy has shown signs. PMIs have been leading indicators have been lower, but and inflation is low. But everything else seems to be.
Inflation is low, really.
Yeah, but the core PC is 1.6, all right. So that's what they usually look at. But anyway, let's call it 1.5 to 2%. It's on the low side. But the problem is that some of the prints and some of the important prints are still coming out quite decent. So they have to cut in 2 weeks' time. But what happens?
Of course they have,
then?
because the market's still pressing it in. But
what happens afterwards?
It's a huge hit to their credibility, because they're going to have to be cutting with US stock indices at all-time highs, most of them.
Yes.
With economic data having somewhat stabilized, with unemployment being at at least the nominal number being at record lows,
and with housing doing well as well, right? So it's tough. It's going to be a tough decision, but they have to cut. But then what?
Yeah, they will do it, but then they might pause, and there is some room for dollar appreciation due to the fact that the market was pricing in like 3 rate cuts, and as I said, and as you said, I very, very much doubt that they're going to go against the market and not cut. But what they can do is postpone cutting again, as long as the data aren't coming in bad. So that means that the market can end up pricing obviously less rate cuts for the year, and that is definitely going to prove dollar positive, right?
Yes. Yeah.
Of course, what will ultimately determine that is going to be the language that we're going to get with the rate cut at the 31st of July, so in 2 weeks from now. So, we'll have to wait and see what kind of language we get, and then we can decide. By the way, I wanted to start by showing a few pairs that, in my opinion, are now at key areas, and one of them is cable. If you remember, I was very, very reluctant with the little rebound we had in the cable, simply because there is only one bullish scenario here, and that is that this move lower might be a descending wedge, but that can only be the case if we see a break above resistance, and so far that hasn't happened. We got rejected from previous area of support once again, and now we are at lows we haven't seen since 3rd of January, which we only saw because we had that spike lower. If it wasn't for that spike lower, I mean, if we were to ignore that spike lower because it was literally a spike, then in order for us to go back enough in time to see such levels, we would have to go back to April 2017, which obviously proves that the cable remains one of the weakest currencies out there. Now, you really love it, you can attempt, as I said the other time, like last week when we were testing this trend line support, you can attempt to buy it here because there is one thing going in your favor, and that is the risk reward. You can buy it here. You can place a stop loss below the spike low, which is like roughly 50 pips lower, and then you can hope for the best. Okay, personally, I'm not doing that. Let me be very, very clear. I'm just saying that I see the risk reward here, but personally, I wouldn't be doing that. Now, you want to wait for confirmation. You still want to be bullish the cable, but you want to be more patient. In my opinion, wait for a break above this previous high that we had a couple of days ago, which is at 125.88. When that happens, if that happens, we will also have broken above this descending wedge. And then you can aim for higher prices, perhaps a rebound that can even take us back to 130. Okay, but until that happens, I would remain very, very prudent, and I would stay on the side. I would rather sell it than anything else. Okay. The fact that cable has been one of the weakest currencies is also what made it one of the best currencies to play Aussie and Kiwi weakness. Just look at it. I mean, once we got rejected from that confluence of resistances up there, pound Aussie, for example, has been moving lower very nicely. We've only seen two types of moves, impulsive moves lower and corrective moves higher. We've already done that twice, and now we are on a third move lower, on a third impulse lower, currently testing a quality target, assuming that this could be a corrective move lower, because if we accelerate lower from here, then we're looking for something totally different, in which case I think you should be looking for, much lower levels than this. 174 should come rather fast if that is the case. And here is pound Kiwi, even weaker than that, but most importantly, and that's why I wanted to focus on that, most importantly, pound Kiwi is currently threatening with a breakdown from this ascending channel, which I always assumed it was corrective in nature, and to simply show it, let me draw here. Look at the nature of this move lower and look at the nature of this move higher, right? Clearly this was the impulse, clearly this was the correction. So what do you assume is going to happen now that we're breaking below this prolonged, but in my opinion, quite clearly corrective move? In my opinion, there is a very, very, very strong chance that we're going to accelerate lower, and that is going to be a major technical event, one that you should definitely seriously take into consideration. Okay. Now, so that is another pair that is, at a very key area. We're currently trading actually below this channel, but since we're, this daily candle is still in the works, you can never assume. Who knows? We might get like a reversal by the end of the day. I doubt it. Let me be clear, I doubt it, but that might be the case. In any case, if we close on the daily below that area, that's going to be a major event. Now, there is another pair that is currently testing quite a key area of support. Actually, it has rebounded a little bit due to the rebound in USD yen, and that is Euro yen. Euro yen, I've been monitoring this triangle. Euro yen just a while ago, I mean, just before I started speaking, just before we got the CPI data actually, was attempting to break below this trendline support. It has now pulled back from there. So, no event yet. In any case, I would rather always, instead of assuming, wait for a daily close. But that is another currency pair I'm monitoring, because I think that there is a high probability that we're eventually going to break this trend line support, in which case I would be looking for a continuation lower. Now, might not happen today, but if we do close below that trend line, I think you shouldn't be trying to fade that. Instead, probably it would be a good idea trading in the direction of the trend. In this case, trading, selling the breakdown from this triangle. So Euro yen was another one I was actively monitoring. By the way, let's go to the Euro USD. Euro USD, I had it on my chart before when Stelios was speaking. As you see, I'm not inclined to be bullish the Euro USD here, and there is a very, very, very simple reason for that. We rebounded in a corrective manner as far as I'm concerned. I mean, so far this move higher looks corrective. The fact that it channels perfectly is a testament to that. And, add to that the fact that once we broke down and we rebounded, we got rejected from retesting this corrective moves channels support, which acted as resistance. Bottom line, I wouldn't be trading the Euro USD, as I've said, because there are better opportunities out there. I mean, why trade something that has been so choppy and literally doesn't move anywhere? I mean, it's grinding slowly over time, but nothing you want to be trading. But if I had to trade in one direction, the Euro USD, I would definitely be on the short side against this rebound high. So let's say against 112.90, something like that. So I'm not looking for a bullish move here either. Bottom line, as you understand, I find no reason why I should be bearish the dollar, not from a fundamental perspective, because from a fundamental perspective, I can think of many, many reasons. But from a technical perspective, there is absolutely nothing at the moment that tells me that the dollar is ready to move lower. Now, if we want to go to the DXY, you can see that we had an initial rebound within a channel, but then the corrective move lower unfolded in what currently looks like a pennant, and we've broken above it. So, looking at this as well, I think the path of least resistance remains to the upside. Okay. So that is that as well. Now, by the way, crude actually did move lower, but so far I don't see impulsive characteristics in this move. So I would still assume that another push higher is likely before we see lower prices. I wouldn't be trying to sell crude here. I wouldn't be buying it either. I don't have a high conviction, but if I had to assume, I would assume that we might have another push to the upside before lower prices. And having to do with the metals, I'm in essence covering some of the questions that I already see here. Nothing has changed in regards to what I see in gold. As you see, despite dollar rebounding, gold has been holding on, in a very solid manner within this triangle. We're actually in the middle of this triangle, while at the same time, silver, as Blake showed, is still trading above this bull flag's resistance. So in essence, it has broken out and is targeting higher levels. So, if I'm wrong about the dollar and actually dollar weakens, that means that gold and silver should fly higher. And, because now that the dollar is acting as a headwind, they're performing quite fine. Imagine if the dollar actually weakens, in which case it's going to act as a tailwind. They're going to accelerate higher, much easier. Okay. So I still view gold and silver as, bullish, at least for another move to the upside. And, that is my point of view. Let me some of the rest of the questions, because some of you write it on the chat, some of you use the question box. Euro yen and Euro CAD opinion. I'm short both pairs. Okay, I hadn't read that question. Now you know my opinion about Euro yen. If you're already in the money in Euro yen, looks good to me, because eventually I think we're going to break down. Now, if you just sold it, I would be a little bit careful, because as I showed a few minutes ago, we're testing support. But assuming that you've already been in the trade for some time, probably you are comfortably in the money, which means that you can just manage that. And yes, I do like it. Now, having to do with EuroCAD, since you asked, let's go on the daily chart and have a look at EuroCAD. And then bonus, I'm going to give you Euro NOK as well, and I have a reason for doing so. Okay, first of all, EuroCAD. If you remember some time ago, we talked about EuroCAD. I said that I see one move lower, I see a triangle. That would make me assume that we have at least one move lower left, equal to the initial move. Now, where would that target? Let's see. Okay, that would target somewhere in the vicinity of like 144. So, still room left for that. So yeah, if you're short EuroCAD, kudos. Good trade. I would even trail my stop loss above this recent corrective move. So roughly somewhere at 148. Of course, I don't know your entry area, so I'm just assuming. So EuroCAD looks good, and EuroNOK looks also good. And why is EuroNOK looking particularly good?
Because I am short. Thank you.
Yes, because you're short, but why is you being short a good idea? Simply because we seem to be breaking below a trend line that dates back to the very end of 2012. So that makes it almost a 7-year-old trend line, and that is something that should be respected for extra confidence. I would also want to see a lower low being printed, which means a move below 955, which was this previous low, which when that happened, it was a higher high, right? Because the previous low was there at 941. So if we also violate the basic principle of an uptrend, which is higher lows, I think that EuroNOK is headed much, much lower, and you can see what kind of a formation we're breaking below. So EuroNOK looks very, very juicy here, for short trades. Kindly check Aussie CAD, gladly. Aussie Yen and Kiwi Yen. Okay. View on Aussie Yen and Kiwi Yen long, specifically. I can't give you views on Aussie Yen and Kiwi Yen longs. I can give you views on Aussie Yen and Kiwi Yen. I mean, if I thought they were bearish, I wouldn't have a problem breaking your heart. You know what I mean? That's what I'm implying here. So I'm going to give you an honest, unbiased opinion. In which case, yes, I drew that a long time ago. I do believe that Aussie Yen has more upside. At the very least, a corrective move higher would imply one more leg higher. We had one leg higher, clearly a correction, which we've broken above already. And I would assume another move towards at least 77.30, the 50% fib. Even better, probably something like the 61.8% fib at 78.12. So it looks good to me. And Kiwi Yen looks even better to me because it made the move first. It reacted higher in a more impulsive way, also broke above descending wedge. We had a little pennant here. We're breaking above. We're currently retesting the previous highs on 38.2. I think an extension higher towards the confluence of the 61.8 and the 200 DMA at 74.30 looks like a very doable scenario. So that's my point of view on those. And I didn't forget our friend that asked about Aussie CAD. Now, question number one, why would you want to trade Aussie CAD? And the reason I'm asking is because I'm not saying that Aussie CAD cannot move. It clearly can. Okay. And if you want a long-term picture, we have broken down below this triangle, which was a bearish event. We have found support, though, at another long-term trend line. Okay, so I wouldn't be like shorting it right on support. But the reason I'm saying that is because Aussie and CAD, in a big extent, have similar characteristics. So if I had a strong opinion, when I have a strong opinion, I should say, about like what the Aussie is going to do or the CAD, I would probably, choose to trade them, let's say, against the cable in this occasion and not against each other, right? I mean, why bet for the overperformance of underperformance of a commodity currency against another commodity currency? I think that's not the best place to be. Regardless, this previous low, for the reason I showed you, is a very, very important support level. So I wouldn't be short against that. But in order for me to be looking higher, at the very least, I would want to see a break above this descending channel. Then and only then you can expect an extension higher. So that's my viewpoint. But as I said, my main concern here is that I think that there are better opportunities out there. I'd rather trade the Aussie or the CAD against a currency with very different characteristics, that is trending very, very differently, right? Presumably, you always want to pair up, a very strong with a very weak currency that gives you, better chances of catching a trend and riding it through, and making faster profits if you are actually in the right direction, having to do with the market. Please, could you tell us about USD yen? Yeah, I can tell you about USD yen. One thing I can tell you is that I literally hate its guts. I'm not saying that because I've lost any money. I actually was prudent enough to stay away from it because you can see why. Because for quite some time, it has been trading in a contracting range, and once it finally broke out from like a multi-year triangle, it refused to actually proceed with this, accelerating to the downside, in essence, with playing out this formation, which makes me believe that there is more tedious trading coming on here. If I had to do something with it, I think that being short against 109.20 can still work. Okay, it can still work, and we can still see lower prices. But would I actually go in a position in USD yen? No, I wouldn't. I'd rather stay away from it and trade other things. Okay. As you see, it's definitely not in a hurry to go anywhere. It's quite a confused pair because sometimes it's being dragged by what the yields are doing most frequently. Sometimes it's being dragged by what risk is doing, but there's a problem here. Those two used to work in tandem. There was a very, very high correlation between what yields were doing and how stocks and risk was performing. But for some months now, we have a decoupling between those two, and that is what has really messed up USD yen and has made it extremely hard to read and extremely hard to trade. So what do you do when something is extremely hard to trade? In my opinion, there's a very simple solution. You refrain from trading it, and you save yourself from trouble. That's my point of view. USD CAD view, please. I think made head and shoulders. If you're talking about the USD yen, yeah, this can form to an ugly inverted head and shoulders formation. Shoulder, head, shoulder. But in order for that to be triggered and prove that it is an inverted head and shoulders formation, what I told you before, the 109.20 level has to be first taken out. So what I said before, that if I had to do something with it, would be being short against 109.20. That's why, because above 109.20, among other things, you're probably triggering an inverted head and shoulders formation as well. Okay. Now, my view on USD CAD is very, very simple. You like it long, you buy it here. But, I wouldn't be buying it below 130, because below 130, we're breaking down from a formation that has been in play since summer 2017. So this is like a 2-year ascending channel, and below 130, we're actually violating that. And I wouldn't want to trade against that, okay? So you like it to the long side, you buy it here, you know where you're on. But if it breaks lower, don't be long. That's my personal point of view and my personal recommendation. Copper, by the way, which we haven't seen in a few days, has spent some time now consolidating in a range again. It's very annoying, but nothing really to see here. Palladium also consolidating near the highs. Might have more downside here. Looks to me like another leg lower towards 1,500 is likely before resuming higher, because it still looks bullish on the medium to long term. And platinum is also rebounding within a channel so far, so I'm not really convinced about this rebound. We're back again within this broad range from 780 to 875. We broke above that range for a limited number of days, and then we ended up breaking down within the range once again. So I think you really need to remain patient, but one thing is for sure, platinum remains one of the weakest metals out there. So if you really believe that gold is going to fail from here, if you really believe that silver is going to fail from here, platinum is not a bad place to be short. I mean, if you're looking to be short one of those, probably platinum is even a better option. Coach?
Yes, buddy.
Shoot. I had one more question which I didn't cover.
Did you say shoot or with an eye?
It was
a combination.
Shoot with an eye, yeah.
With the combination. Shoot it.
Yeah. Pound CAD. I had a
Put a shoe on it, Steve.
I had a question about pound CAD, and pound CAD, as you see, I was assuming an acceleration lower if we broke below this expanding triangle. That actually did happen. As you see, it's extremely weak, but I have to warn you now. Look at this trend line support. This trend line support dates back to 2010, and it's passing currently from like 160.50. So, it's a good trade if you've been short, but be very, very careful because this is like an almost decade-old trend line support. So, be careful against that level. We might see a reaction from there. We might see a rebound from there. So I'm just, warning you about that. Okay. I would definitely, if you're short, good for you. I would definitely take some profits if we make it down on that trend line. Coach, do we have an interview today?
We do. You did a great job, but you were a very bad boy today.
I was, eh? Will you spank me?
I'll leave that to your wife. Anyway, yes, we do. And, one of your favorite asset classes is going to be covered here. You want to guess?
Cryptocurrencies.
Yeah. So I have Dell with us at Satoshi Heavy.
Who knows, Coach? Cryptocurrencies might be our next monetary system, but this is not a 180 degrees turn. But
it'd take time.
Do I think that the current cryptocurrencies that we have out there are going to be the ones that survive and thrive? I very much doubt it. I do think that the world is going digital. Unquestionably, that is the trend for everything in life, right? Everything.
Yeah. I'm digital.
Yeah.
I'm really a hologram.
Yeah. From Star Trek.
Exist. Huh?
Yeah, from Star Trek.
Yes, I am. I'm a hologram. Anyway, yeah. So, feel free to interject.
Yeah.
I think this is going to be great.
So, yeah, I think we're going digital. But is that going to be such an easy thing like saying, okay, let's adopt Bitcoin and Ethereum and, that's it?
Yeah.
No, I very much doubt it.
Well, I don't know that, but if you saw me earlier, I showed a descending triangle, and I think Bitcoin's going to 7,000 to 6,000 into the fall.
Might be the case, but I have to tell you that so far this move lower, at least on Bitcoin, it looks corrective to me. So, despite my big disbelief about the long-term survival of those cryptocurrencies.
Yeah, the daily high confirmed.
I would assume that we will end up trading higher at some point. When
after 7,000.
Might be the case. Yeah.
That's my call. No, Sir Pinkert. Anyway, let me get to Dell here, buddy.
Yeah,
absolutely. And stick around and feel free to interject because
unfortunately I have a meeting. So
okay. All right. Well, have a great day, Steve.
I'm just going to stay on until I'm sure that you.
Okay. Thank you. So, Dell, I'm promoting you to panelist here. I just want to. I'll unmute you. I don't know if you've been in Zoom before, but you.
No, this is my first time, so I don't know if you can even hear me.
I can hear you loud and clear, Dell.
Okay, cool.
So you could also share your screen. If you just hover your mouse over the bottom, you'll see a green box that says share. And then you click that and we'll be able to see your setup.
Okay, I see. All right, let me just readjust some things here.
Sure. So what great timing to have you here today with Mnuchin's impromptu press conference and congressional blah, blah, blah about Libra.
Yeah, there's a lot of stuff going on in the broad spectrum of things for sure, and it's definitely a very, it's up in the air right now in regards to where we're going to go for the long-term basis.
Are you going to share your screen?
Yeah,
then, okay.
By the way, Coach, since you wanted me to interject, I have to tell you, since I'm a guy that, you know, believes in economics and macro, I'm pretty sure that, you know, cryptocurrencies are still moving along with sentiment mostly than anything else. And one of the reasons is that, since you mentioned Libra, there is nothing that should be interpreted as bullish if Libra ends up getting adopted, because Libra, oppositely from, let's say, Bitcoin or Ethereum, will actually be backed by a basket of actual currencies. So just from a fundamental perspective,
It's
adoption,
different.
it is totally different. Not different. I mean, adoption of a concept like Libra is totally against what Bitcoin and Ethereum want to do.
Interesting.
Yeah.
Do you agree with that, Del?
Yeah, I definitely agree. It's completely different in the way they're going about their approach into handling their cryptocurrency. And it does offer a lot of possibilities moving forward into just bringing more eyes and more legitimate backing to what cryptocurrency is trying to be. And it could definitely help pros as a long-term, maybe not upfront won't be good, but in the long-term spectrum, after everything gets ironed out with government and stuff like that, I think it'll be a good idea and a good thing for them, a good thing for the entire cryptocurrency market as a whole.
Okay, cool. So, you know, I like to get in a time machine with my guests, Del, and, you know, everyone has a story of how they got involved in trading. And, you know, I'm always interested in what you were doing prior to it and what was the catalyst that brought you into the market. Was it that you were just an early adopter of Bitcoin and you just started looking at markets and charting? How did it happen for you?
So, yeah, back when I was working a normal day job, 9-to-5 day job.
What was it? Come on, man.
I was a cook. So,
okay.
Yeah, I was a cook at this local restaurant here.
Yeah,
and,
cool.
I was doing that while I was going to school, and one of my associates or coworkers, he just asked me if I knew what a Bitcoin was. This was like mid-year 27. It was the year Bitcoin flew.
Okay.
That was towards that 2017.
Yeah, well, we peaked last year at 18,000. The beginning, the end
That
of.
was,
yeah, it was the end of 17. You're right.
Yeah, the end of 17, like around October.
Yeah.
Is when I was introduced to Bitcoin, and yeah, I had no idea what it was. He's like, "Do you know what this is?" Like, no, I don't. He's like, "This." Like, he was telling me about what kids understanding what cryptocurrency was. So all I did was I did my quick little research, saw what it could possibly be. I love the idea behind cryptocurrency. You know, anonymous, not backed by any world central bank, whatever, yada yada. I really like the idea, so I went ahead and made my first purchase of a cryptocurrency around that same time, which happened to be Litecoin. And yeah, ever since that point, Litecoin took off to whatever, $300 like that. And I was one of the lucky souls who sold near the top. I sold at 320 after buying from at 101. It took me a while to buy, but after I made that first buck, it really interested me. I was like, hey, this could be something you could actually possibly do as a future if you really take it seriously. And at first I thought I was taking it seriously, but I really wasn't. And I quickly almost immediately, as soon as I made all that, I bought quite a bit, and I made quite a good return off my very, 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 very first ever trading cryptocurrency, or whatever you want to call investment, was very positive, which is absolutely the worst thing any trader could do for their first trade ever, you know? It gives them a taste of, oh, you're good, you know what you're doing, but when in actuality, you don't know anything. And so I quickly, within the first 6 months after making that initial gain, which was like 4 times my initial, 3.5 times my initial investment, I quickly almost lost all of that. And so when I lost nearly all of that, it took me like 3 months to really understand, okay, you don't know anything. You don't know anything. And you actually have to take your time to understand what market is trying to tell you. And you have to actually treat it like a serious job if you really want to make it pay you like a serious job, and really want to make you change your life, you know? And so at that point, I really started diving heavy into books and reading anything I possibly could, watching videos after videos, countless videos, going through countless ways to analyze a chart. And then for some reason, alleyway, I stumbled upon an alleyway, and all of a sudden it clicked to me. And that this is a type of way I should be studying trading. And that point was about March 2018. And from there, I just really everything started to really click. It makes sense. And I quickly knew how to make money. You know, at first it was really easy to make a lot of money. It was really easy. It wasn't hard to find out what setups made money. It wasn't hard to find out where to put your orders to make money. It was really easy. But the key here was not the fact that I knew how to make money, but it was the fact that I didn't know how to lose money. And so at that point, I was stuck at a certain, there's this threshold I kept hitting in my portfolio. I hit it like 4 or 5 different times. And every time I hit this number, I lost at least 25% or more. And I was wondering, like, why can't I sustain this? What can make me sustain this? And so at that point, I knew I needed to do even more study and more understanding into the market. And at that point, I knew that the key was risk management and money management. And that was about June of that same year, June 2018, about that same year. And after 2 hard months of trying to really rigorously find a system that makes sense into my analysis, and what made me feel most comfortable trading, it really started moving for me. My portfolio really started showing me what I really wanted to see. Our setups left and right were getting better take-home wins because I wasn't holding on to certain things. As soon as my targets were met, I quickly exited. I stopped doing all the silly mistakes that the young trader would do at the beginning, thinking they know better about the market instead of just listening to technicals. And at that point, it really started taking off in my professional trading career, not only just in the understanding aspects, but in regards to respect around the area. People started asking me more questions, more about my opinions and stuff like that. And around October or September of that same year, I went ahead and started my little group where I helped teach a few people how to invest into cryptocurrencies and teach them a little about how I trade and so forth. And ever since then, I've been doing very well. My people have been doing very well. And yeah, it's been a hell of a ride. Let me tell you that, it's been a hell of a ride in a very short time. A lot of emotions, a lot of things have happened in a short amount of time, but I will not trade it for one bit. I know for a fact this is what I'm supposed to be doing for the rest of my life, and I have no doubt about that. And that's what I'm definitely most proud about, most happy about, especially since I've done most of my work. I do accredit a few people along the way for the basis of my understanding of the market. One of them being, two of them are analysts on Twitter. I don't know if they have professional pages outside of Twitter, but Trading Wrap was very influential and very inspiring to me in regards to my understanding to the market. And also another big influence of mine was Andrew Cardwell. He was a huge influence of mine as well into understanding how momentum works and what it takes to shift the market. And I just wanted to give those two guys really appraisal for making me who I am in a sense, because without them I would never be nowhere close to a trader I am today. And I do really appreciate those two people along the way. So yeah, it's been a hell of a ride, but it's been fun, and I know for a fact I'm not going to stop here. So it's going to be fun for the remainder of this time, for sure. Dale, hello? For some reason I cannot hear you, bud. All right, so I don't know what's going on. I don't know if anybody can hear me, but if you can hear me, please shoot me a message in. Yes, okay, cool. All right, I'm just making sure my I can't hear Dale right now, which is alarming me, because I feel like he should be asking questions and stuff like that, and monitoring this. But anyways, yeah, let's continue on this discussion. You know, hopefully Dale could his audio comes back up or something. I just messaged him on Twitter to see what's going on, just make sure things are going the correct way, because I never did Zoom, so bear with me. But anyways, yeah, so I've only been trading for about 2 years now. It hasn't been a long time. A lot of traders have a lot more experience than me, and I understand that. And that's why I'm very humbled, and I respect everybody's analysis, especially those people who've been there before me, such as Dale. I have high respect for anybody who's made a name for themselves in this field, especially if they have the longevity of it, because it's very hard to stay in this field. A lot of people quit within the first 5 years. So I do appraise anybody who has stayed that longer than the first 5 years, because that means you're in there for a bigger reason. You have something underneath you in your mind that's really firing that fire and that desire to succeed. And not a lot of people have that. And that's why I praise a lot of people who stay in this field, because it's not easy. It's not easy at all. For those people who tell you this is easy, it's not easy. I'm telling you, it is not easy. It's not. The people who do tell you it's easy are lying. People who tell you it's easy, you want to run away from. All right? Seriously. The people who say you're going to make $1 million in the first year, 2 years, 3 years, 4 years, 5 years, shut up. Push them away. Stop. They're fake. They're lying. They haven't made 5 million. They haven't made $1 million either. Guarantee it. Guarantee it. If they have, it's luck. Guarantee it. Or it's off some other bull BS, you know, like I forgot, like an affiliate program or something like that. Stop. It's not easy. But I will tell you, with hard work and dedication and the right tools and the right people coaching and showing you and teaching you and guiding you, it is possible to make it in this field. It is. But it takes time, effort, dedication, sacrificing time. You have to be very humble. You know, you have to throw away your ego. You can't, if you have an ego in trading, you're not going to be a good trader. You cannot have any ego in trading. You can't. If you have an ego in trading, you're going to be too biased one way or another at all times. Seriously. But anyways, yeah. So go ahead and answer me questions and stuff like that, and we'll go on for us. But from this perspective, I'm just going to go ahead and start talking about Bitcoin and the total perspective of things. I really want to throw out the BLX chart, because this is something I haven't talked about, and I really wanted to talk to you about this, because The BLX chart, I haven't fully technical analyzed in quite some time. It's been a while. The last time I analyzed the BLX chart, which is the entire chart of Bitcoin history, was right here. That was the last time I analyzed the BLX chart. So it's been some time. So I wanted to wait to do this. I was going to do it yesterday on my live stream. By the way, if you follow me, if you don't know who I am, Satoshi Heavy on Twitter, 20,000 following. I have a YouTube as well. If you go to my Twitter, at Satoshi SAT, I'll draw it up here right here. So this is my handle on Twitter. If you follow me, you can go follow my follow a link to my YouTube where you could subscribe to me and also subscribe to notifications. Because I don't teach, but I host a live session every Sunday around midday Eastern Standard Time. And if you go ahead and follow me on Twitter and YouTube and subscribe to my YouTube, you could go ahead and put the notifications so you can join in a discussion every single Sunday. We talk charts, we talk crypto, we talk Forex, we talk the whole nine. You hit me with any questions, I'll be happy to answer them. Anyways, I wanted to share this with y'all because this is very peculiar to me. This entire structure here is very peculiar to me. I'm an Elliott Wave trader, and the way I analyze this market right here is very peculiar because a lot of people are calling. Okay, there's a lot of people calling for new highs and like a new paradigm. You know, a new paradigm means like you're breaking the highs by a long slide. You know, I'm saying like a new paradigm like 30,000. You know, like 30,000 bucks. A lot of people are calling for that. And there's a lot of people saying, okay, we're going to $50,000 like or whatever, blah blah blah, yada yada yada. And I want to kind of hold that in their tracks, and this is the reason why. As an Elliott Wave trader, you have to understand how markets work. And to do a quick rundown to how Elliott Wave works is Elliott Wave works in a series of impulses and corrections. So you have your impulses and you have your corrections, right? And your impulses, they always accompanied 5 waves, and your corrections have 3 waves, right? So with this basic understanding of Elliott Wave, we conclude that by opening this chart, looking at it, pulling up, is that you see a clear 5-wave rise from the base, clear as day. There's no if, ands, or buts. You cannot tell me that's not 5 waves. If you're saying that's not 5 waves, you don't know how to count, or you don't know what to look for, or both, you know, or both. Shoot, sorry, I got a message from Andrew Cardwell right now. He just shoot me a message on Skype. I want to answer that real quick. Bear with me. I'm going to type this up real quick. Then we'll get back to this discussion. Okay. All right. So, yeah, so there's no doubt about it. And you cannot tell me that this isn't a 5-wave rise from the base. And just with this basic understanding, what can you expect from here? What can you expect? A 3-wave corrective phase, right? Regardless. Now, there is people saying, there's possibility saying, and even Elliott Wave traders saying that this is our correction, which is obviously is a correction, right? This is a 3-wave corrective phase, right? Obviously. It's obviously a 3-wave corrective phase, right? But I am a huge trader on time. If you don't know me, I use time like price action. Time is so important to an Elliott Wave trader, and if they don't treat time as an equal to price, I'm sorry, but I guarantee you that Elliottition isn't very good at Elliott Wave, and he's also using other forms of analysis that aid his Elliott wave analysis. Time is so important. And let me hold on. I'm trying to find this link so I can drop it to Andrew real quick, so he doesn't yell at me, because right now he's a little upset. I didn't share this freaking thing with him on accident. I don't know how I didn't do that. So I'm going to share that with him. Copy. So sorry. So sorry. Get this out of the way. I just really need to share this with Andrew. Real quick, give me a 5 seconds. If you guys don't know who Andrew Cardwell is, he's a very renowned and very respected analyst. He is the grandfather and the godfather of the RSI. He is, if you know anything about RSI, it's probably coming from him. I'm serious. So,
okay, what happened? Did we lose Dale?
No. Hello?
Hey, it's Steve. Did we lose Dale?
Yeah, actually, it looks like he's not logged in, so something must have
Stelio,
happened.
I couldn't see him also when I left the webinar, but since he was speaking, I thought it was just a bug, to be honest.
Okay.
Hello? Can you hear me?
Yes,
Hey, yes, we can hear you, yes.
we can hear you.
Can you see my screen?
Yes, we can. Go on. We just, seem to...
Okay, I thought you guys lost me. I kept hearing you lost me. Like, oh shit, okay.
No, I think we lost Dale, so...
Yeah.
Oh,
something must have happened to his machine or something, so we're gonna...
Shoot.
But carry on until...
I forgot there's two of us here, kind of.
Okay.
Anyways, so with my respect to time, there's a few things that I have to pay attention to in regards to time. And it's the fact that typically your entire impulse, by a minimum, will take this amount of time to form. By a minimum. But the actual time frame you're looking for entire correction would be there. Now, I'm not saying it's going to take to the year 22 to move up bullishly, but from my understanding of time and how Elliott wave works and the way I've been trading, this is very sound information. And if going into this right here and saying, if this is a minimum, absolutely minimum amount of time you could allow for a corrective phase, this basing is too far from here to be for this 3-wave corrective phase to say this is the end of the correction. It is too quick, too shallow, and it just would not make sense. And this is why I say, regardless of the fact, there's going to be at some point equal lows or close to that, or even breaking these lows at some point in the future. Some point.
Okay. So, actually, I was just gonna add something. I must admit, I didn't hear the whole presentation. I just came in a few minutes ago, but we seem to be on the cusp of to see what's going to happen in terms of regulatory and how governments are gonna treat cryptos going forward, and that's going to be very interesting. I'm sure it's going to bring quite a bit of volatility, but I don't know if you touched on that, but that's definitely got me interested at the moment.
In terms of the long-term perspective, a lot of players in crypto don't want regulation, and to me that's silly. Because with regulation and with the government putting some ground rules and really backing the understanding of what cryptocurrency is, that really opens the door for bigger term players to step in with more confidence that they're not going to get screwed or lose everything they invested.
Yes.
And at first, it's not going to bode well for the price of cryptocurrencies. Obviously, more regulations, more restrictions means harder to trade it, yada yada. You have to be certain people to trade it, yada yada, blah blah blah. It'll cause people to sell off, it'll panic, blah blah blah. And I think that'll be right here. Right there is when the regulation is going to come in. And with my understanding, this way psychologically speaking, is this plays well also into this kind of structure I'm looking to study here, and we're going to talk about that in a little bit. But in my understanding, with how the government just recently put out that little press video discussing the volatility and not the fear, but their worries in cryptocurrency. Well, that's the first step, and they won't regulate it heavy until this moves volatility again in one direction or another, either up or down. Sorry about that.
Yep. I think I personally don't trade crypto, but the thing that has scared me for so long is the fact that you hear stories, 50 million has been stolen and this has happened with this exchange. So I think without regulation, it's going to be very difficult for them to make the big move forward, right?
I have no idea what this alert is. Well, shut up.
Oh, Ethereum is moving apparently. Okay, well we have a few more minutes if you wanna. I don't know what you were planning to show, but just you can continue and then we can wrap it up.
Yeah. So I just wanted to continue on this quick discussion with the long-term perspective of things. I want to also now dive into, because in my regards, no matter what, it's going to correct at some point. It's just finding out the exact pattern we're trading, and I think there's a good possibility that we could base here and move one leg up higher, possibly break this high, and I think that's when the U.S. government and the governments around the world will really step in. If we come close or break that high, and that's when I think this will play in effect and that regulation will come into effect. This pattern here, in an Elliott wave perspective, is impulsive, and there's no doubt about it. In any way, shape, or form, this is impulsive. Whether or not you call it a 5-wave rise or a 3-wave rise, you cannot deny the fact that that's impulsive. And after every impulse, there's a correction, at least, and then followed by one more impulse, by the minimum. So with this basic understanding, is we're gonna correct here. I'm not saying this is the low or this is the whatever, because in my opinion, at some point we're gonna test 8,800 to 7,800. This range right here, that little pocket right there, at some point. But with this base understanding of how impulses and corrections work in Elliott wave, it's hard not to say that we base and find support here and move up one leg higher in this little form, in this little leg. And then at that point, we'll better understand exactly what the market's trying to tell us, because at that point, we'll see more clues to if this pattern we're trying to study right here, this being a flat, is true or false. If volume comes flying in and you break certain levels, I have levels that we cannot cross to sustain this type of pattern. Throw them up here real quick. And it's right here. And it's pretty crazy. It's pretty high. It's pretty high. But moving above that will definitely open up a new paradigm to this cryptocurrency. But I do not think we even get close to this. I think we're going to find a topping point between this 30,000 and 20,000 point. If this structure we're studying right now is indeed the structure we are studying, that being an A in a 3-wave move, a B in a 3-wave move, and a C in a 5-wave move.
Okay, cool. Well, that sounds good for a kind of a medium-term perspective on it. Okay, I don't know if you covered what you needed to cover before. I think we can call it a day. It's been over half an hour, so thank you. Thanks again for coming and for sharing your views. And we're going to get a hold of Dale just to make sure that he's okay. So thanks again for joining. And
thank you. I appreciate the time you guys gave me. I appreciate the opportunity to get my opinion and my voice out. It really fuels my fire and really propels me and really helps my not only myself and my brand, but myself as a trader. So I appreciate that. Thank you so much.
That's great to hear. We record this video. Obviously, we're gonna publish it later on. So that will be available for people to watch as well. So thanks again for coming, and we'll see you all tomorrow. And I will finish it with Dale's tagline, which is "Don't just count your pips, count your blessings." And thanks everybody for watching, for listening, and thanks again. I'll see you tomorrow.
Bye-bye.
Bye-bye.